Jake Bassett. I'm the owner of JB Accounting and Tax, and for the past 10 years, I've been specializing in doing taxes for the door-to-door salesman or summer salesman. And this video is going to summarize what we do to help them out. And it's called Setting Up an LLC Taxed as an S-Corp in order to save you from having to pay too much in self-employment tax. Before I get into this video though, I just wanted to say, please forgive me for the poor editing. I'm a tax accountant, not a videographer. I am trying my best though. Someday I'll get a professional firm to do these for us, but I really just wanted to get this video out there as I've had a ton of requests for it. In order to make it easier for us to understand, I'm going to explain this the exact same way I would if I was presenting to your team during your morning meeting. Imagine that this piece of paper is a whiteboard that I've put up in front of your team during your morning meeting. On the left-hand side, I'm going to explain what will happen if you don't form an LLC. If you don't form an LLC and go out and make $60,000 this year and have $10,000 in expenses, your net profit would be $50,000. But since you don't have an LLC, all of this income is in your own name and social, and therefore all of it is subject to self-employment tax. Self-employment tax is also called Social Security and Medicare tax, and it's 15.3% of what you make, or in this case, $7,650. Self-employment tax is totally different from income tax. Income tax is actually the same whether or not you have an LLC. So that's not why we're forming an LLC today. And no matter what, you're going to pay about the same amount in income tax whether you have an LLC or not. Income taxes are those taxes that you are already familiar with doing once per year, every January through April. It's self-employment tax, though, that is the reason why we are trying to form an LLC taxed as an S-Corp. Nearly 10 times out of 10 during this point in the presentation, I'll have someone raise their hand and say, "Hey Jake, what's the difference between an LLC and an S-Corp? I thought they were the same thing." And I love this question. It's a great question. You do need to understand it. An LLC is a term that is not recognized by the IRS at all. It's called a disregarded entity. Only the states recognize an LLC. So when you form a limited liability company in your state, you have to then tell the IRS how you would like that LLC to be taxed. In this case, we want the LLC to be taxed as an S-Corp because of the way the IRS looks at an S-Corp. The IRS views an S-Corp as a separate living, breathing entity just like any other human. And so it has to file its own separate tax return just like we do. The difference though between us and an S-Corporation is that one day you and I will grow old and we'll need Social Security and Medicare in our old age. And so right now, as we earn income, we are required to pay into those programs, Social Security and Medicare. In this case, it's 15.3%. An S-Corp, though, will never grow old, and therefore, an S-Corp will never need Social Security and Medicare. So the IRS does not charge S-Corporations self-employment tax or Social Security and Medicare tax. Now that you've got your LLC formed and your company is paying your LLC and not you personally, we can now reclassify that $50,000 of net income as net income to an S-Corporation. And remember, S-Corps do not pay Social Security and Medicare tax. Thus, this saves you $7,650. Sorta. I'll explain the sorta later. Like with many IRS rules, there is another rule or exception that goes along with this rule. The IRS has said that if you are the owner of the S-Corp and you're also the person who does all the work for the S-Corp, you have to treat those as two separate things. And the owner must pay the employee, again, it's you, a W-2 or a reasonable salary. And I know that sounds super strange, that's why I save it to the end, but that is the final part of it. So whatever salary you pick, you will pay Social Security and Medicare taxes on that salary amount. Now in this case, let's just say we decided that a reasonable wage for you, because it was only 4 months, you're a young kid in college, it's $10,000. Okay, so you made $50,000, but we're going to do a W-2 wage to you, the employee, for $10,000. What that means is we will pay 15.3% in Social Security and Medicare tax on the $10,000. So that's $1,530. So the true savings is not the full $7,650. It's really $7,650 minus $1,530 equals your net savings. So I hope you liked that video. I wanted it to be very informational, but at this point in time, I am going to plug JB Accounting and Taxes Services really fast. We charge about $595 a year to do everything for your S-Corp, your quarterlies, your annual S-Corp return. We also do a free tax planning meeting for that, included in that $595. So if you're interested in using us, the phone number and email that you should contact us at is below in the description. Also, please subscribe to our channel if you're a client. If you're not a client as well, we're going to be posting more videos like this that help you understand what we do for you. We're going to explain things like what are quarterlies and what exactly are we doing. We're going to be answering questions that we are getting from clients all the time, and hopefully using YouTube videos it'll be way more easy to understand those things. So thanks again, and until next time, we'll see you.